Hi, good morning and welcome to 3 Charts in 1 with me, Richard Perry, market analyst for Infinox on Wednesday, the 27th of July. The 3 charts I've got today, I'm looking at euro-dollar ahead of this Federal Reserve meeting. I'm also looking at the oil price, which has shown some interesting moves in recent days, and the S&P 500 futures, which is holding on to a breakout for now. So let's just start with this euro-dollar chart. What we have seen is euro-dollar, which rallied, and that rally on a little bit of dollar weakness, a little bit of a dollar correction as the Fed moved into its blackout period. But since then, it's sort of resisted around the 102.75 area, sort of tested that a few times and then just drifted away. Yesterday, it decisively moved lower. It looked like it was starting to generate some real downside momentum, but it's picked up a little bit overnight. But it really does sort of have an air of a chart that is again ready to move lower once more. And you've got the Federal Reserve meeting today, and any sort of hawkish sort of lean from the Fed, we're going to see the dollar strengthening once more. That will mean a test of parity again, sort of that 1.000 level, and potentially that low at 99.55. But it certainly looks as though on this configuration of the technicals that selling into strength remains the way to play euro dollar, as any strength seems to continually fall over. You've got this big picture downtrend which is in play, and lower highs, lower lows underneath that resistance at 103.50. That's the main resistance that comes in on euro dollar, but 102.75 at the moment is in place. And you've got this 4-hour chart, which again is sort of turning lower below 50 on that momentum. So again, sort of looking negative. Let's go, selling into strength is the way to play euro dollar at the moment. But a close below 101.20 today, I think that you're looking at parity once more on euro dollar. And onto this oil price chart. Well, we were in this downtrend channel for the past 6 weeks, lower highs, lower lows, but look at this 21-day moving average, capping the gains on each of the last 4 occasions it's been hit. It's really interesting resistance there, and that is now flanking also this downtrend as well. Lower highs also coming into play. We've got this purple area of resistance between 107.65, 109.65. Lower highs within that, but essentially that is the main resistance overhead, because if it breaks above that, it completes a little base pattern, little head and shoulders base pattern, but we can't really think about that yet because it's not there yet. But what I would say is this looks to be also trading with a negative correlation to the dollar. Anytime the dollar strengthens, oil price seems to be weakening. We saw that yesterday. We've seen that in the last couple of weeks, actually. We've got negative configuration on this momentum. Any sort of unwinding move back towards 50 on the RSI is a chance to sell. And again, it had that bull failure yesterday at that 21-day moving average and the downtrend channel. So it looks as though still selling into strength is in play for the oil price. Looking on this 4-hour chart, we can see a little bit of a less decisive negative configuration, bit of a sort of a ranging outlook between sort of 40 and 60 on that RSI and the 4-hour chart. But essentially, I still think that the bigger trends are down, bigger trends are negative. So I'm still looking at selling into strength on that and retesting that initial support at 101.50, but essentially testing 100 down towards 98 figure area of support. And finally, on S&P 500 futures, well, earnings season hasn't been that great, but US stock markets have been pulling higher. Breaking through the resistance of 39.50 was an important moment, and it's been struggling to hang on to that. Well, I say struggling, it's fighting to hang on to it. A little bit of a downside move below that support yesterday, but then a tick higher overnight. Essentially, I'm taking 38.75, which was an old gap resistance, which has basically become supportive now. I'm taking that as a pivot area. So anything underneath that would be starting to turn negative again. And also look at this 21-day moving average has turned up decisively in the past sort of week and a half, and it hasn't really been decisively moving higher for a long while since that April time. So that is again a basis of support I'm looking at for near term. You've got the RSI, which moved to 60, which is again sort of confirming the breakout and sort of multi-month high, but also holding above 50, which is important as well. So slight edge of improving momentum there. And again, also trading above the 55-day moving average. So there are technical signals that are positive on S&P futures, but it has to hold on to this support. The Fed is important today. Holding on to the support in the wake of the Federal Reserve meeting would again add further sort of indication that this is starting to turn a corner. But it needs to hold above 38.75, ideally above 39.50 to maintain that support. 4,004 is the initial resistance on this. 4,015 initial resistance. A breakout through that, and you're looking at sort of 40.80, maybe even 4,200 on S&P futures. So I wish you good luck in your trading today, and I will speak to you next time. Thank you very much.